We now turn our attention to diversified services group Imperial Holdings.
We've got a market cap 24.3 billion, price earnings 9.6, dividend yield 3.6. No numbers out, logistics, a tourism, a vehicle retailer. Chris, let's come to you first. There's CIC Holdings, fast-moving consumer goods into SADC. One of the things we talk about often on this show is companies moving into Africa. They're a logistics player. They've got the CIC, but I'm also thinking, you know, those logistic issues that companies have, exactly. Maybe they can back into it and be one of the big winners in this space.
This is a company that's gone through a lot of pain. They had enormous amount of growth and then realized, oops, we didn't need these parts, and got rid of a few things, and like the aircraft leasing a few years back. The point is that they've gone through a lot of pain, that restructuring, etc. What's there is a damn good business, okay, at the cusp of our own economic cycle starting to take off. And this is one that you do play the economic cycle very strongly. All right. Not only that, it's actually going into a region which is growing very rapidly, okay, and so it's got almost everything lined up to do well. The only thing that can go wrong is if management actually mess this up. And I don't believe they will.
Be the first, but you don't think they will?
I don't believe they will. But effectively, they are so well positioned at this stage for the upside and to take advantage of the circumstances they've placed themselves in the region. They're on the right side of our economic cycle in South Africa. Everything is there. It's really theirs to lose, and that's why I think it's at that cusp of being great. Also, its dividend yield is great, and I think secure. Its earnings yield doesn't make it look, to me, particularly expensive at all. And I think maybe there's a bit of a legacy overhang, you know, a bit of a derating, you know, because of the restructuring that has taken place, but. To me, that then says there's the opportunity. There's also financial services, in a sense, where there is growth, not like the bigger banks.
And attractive PE, I mean, he's sitting at 9.6 or so. Exactly. Stephen, would you agree with Chris that the only thing that could go wrong if management perhaps make the wrong decisions, and perhaps looking at what they've been doing over the last 15 months, spending around 2 billion rand on acquisitions, do you think that could get them in hot water if they just carry on this acquisitive path and perhaps get the wrong companies into their stable?
I think one always has to watch acquisitions very carefully. I mean, bolt-ons are fine, but there's huge danger in that,
and overpaying,
overpaying,
potentially massively overpaying.
Absolutely, but there's another issue which is either a threat or an opportunity. We believe that with Walmart looking at Africa, the logistics is going to be a huge issue in their lives. And so either that's a great opportunity for Imperial with this logistics, or possibly a bit of a threat. I don't know which at this stage.
But I mean, that comes to the Africa story, and it's, you know, part of having any sort of business is this logistics. And as soon as you start moving out into Africa, and you know, you go to a country and you put a few stores into there, the logistics are completely game. Whether you're ShopRite, whether you're famous brands, if they can leverage that, that's a huge opportunity for them. They're also hugely cash generative. I mean, some 2 billion in their last financial year before capex, a lot of capex going in, but they really are making good money, good cash. Or at this stage in the cycle, to Chris's point, there's still a lot more upside to come.
Absolutely.
But that's the problem. If they've got cash and they're doing acquisitions and still have to bed it down, that's where the management mistakes can come. All right, because sometimes management can have too much cash. All right, and
they go and buy silly things, they pay too much.
Exactly. But at this stage, this doesn't look bad.
Okay, so is that hot?
Hot, absolutely.
Hot. So buying 116 rand. For you, Chris?
No, I think it's still a buy in the context of our market. I will say that in the context of a market, there is growth, there's still potential and upside in this particular one.
Stephen?
Yes, I'm happy with that.
So in other words, hot?
Yes.
Fantastic.
I'm going to make it a hot show. To be honest, last time we did them, I wasn't so impressed, but I've done some digging, I've done some, let's be honest, some understanding. Logistics into Africa. I think this move into Africa, as Stephen said, you know, Walmart is a risk or an opportunity. Let's say it's an opportunity. famous
Sounds like a
brands.
bit of an opportunity there. I'm sure that Walmart
There's
will
always
continue the
risks.
existing
Yeah.
resources.
If not Walmart, Kevin Hedderwick or ShopRite, somebody.
Okay, fantastic. On that note, hot stock picks. Chris Hart, of course. Let's start off with you. What is your
Well,
hot stock pick?
I thought Richmond, it's an interesting one. It's sort of, I think, virtually at the...
Sorry, did you say the drachma? Just kidding.
Richmond hitting a peak. I think just yesterday, when one looks at where it's come from, I think 12.50, somewhere around that in the bottom of the market. There's a slowdown in China, and the irony with this kind of thing, if you aren't genuinely wealthy, you've got to at least fake it. And that means, and in these kind of downturns, funny enough, not necessarily bad in markets like
It's
China.
like the clicks effect in South Africa where
Yeah.
people go and buy cheap lipstick. And
Exactly,
things like that to feel
instead
better.
of that. But yeah, you'll buy the Rolex and other sort of goodies that Richemont sell in that slowdown. I don't think it's a problem. I think also when one looks at the volatility of the rand and the risks, you are buying an outstanding business. It is quite richly priced and all the rest of it. So I would have that caveat, but I think it's a solid player. And from that point of view, it's got it's sort of a defensive nature to it.
Wow, I wish I could fake it with those kind of products from Richmond, I must say. Stephen, on to you. Hot stock pick.
My pick would be ARM. I know commodities have been marking time for the last 3 or 4, well, quite a few months actually. But the big boys are coming up. Well, when I say big boys, that's Billiton certainly, June, it's year end, ARMS as well, and of course you've got the Anglo half years. Now I think those are going to be good results, and I think that if you look at the consensus forecast for ARM for say June next year, its forward P is actually a tad less than Billiton's. And you've still got quite a lot of expansion, iron ore, manganese ore, and then of course it's got a whole range of other businesses. The core is at the moment is most definitely iron ore, manganese, and those.
Is it fair to almost call ARM a junior Billiton? If we jump forward 10 years, that's where they could be if everything plays out. A really huge 500 billion global player.
I think there'll be a bit of a stretch, but what they are, because a lot of their businesses are in partnership. Manganese and iron ore with Assor, and then they've got partners in platinum, Anglos and Implats, and they've got the Russians at Inkomati, and they've got the Brazilians in Zambia. So but they choose very good partners, and where they run the operations, their management is very, very good, and they've got a very strong cash flows and a very sound balance sheet. So they've managed their expansion very well. Whereas Billiton's was, well, from the time it was created in the early years of the century, it's been more kind of organic cash flow, and once BHP Billiton was put together.
Fantastic. So what is your view on Richemont and AR?
Richemont, I'm going to take Chris's words right out of his mouth and put them back at him. Solid player, yes, but richly priced, and I can't afford the Fansor watches. ARM I like. I remember their last set of numbers. I was massively impressed. Really, really good looking company, and I think often overlooked in the resources space. We typically go for the big players. I think not looked at.
Glad there's a bit of regurgitation going on in the studio, or reiteration rather. I'll be nice.